Hi, I'm Grant Mundell, investment specialist with Equity Trustees with our December market review. Equities mostly rallied. After another very strong year, the US stock market ran out of puff in December and saw a rotation from tech into cyclicals as investors looked to a wider set of opportunities emanating from rate cuts, fiscal stimulus, and less onerous tariff pressures. The ASX 200, or the local share market, rose 1.3% to finish the year up over 10%, driven by the resources sector as commodities broadly rose, supporting the recent trend to positive earnings revisions. Notable commodity moves included nickel and copper, which both rose up over 14%, and silver, which soared around 23%. European and emerging market equities capped off a strong year, rising over 2% each. Australian bonds sold off as hawkish RBA rhetoric impacted. Australian 10-year bond yields rose 23 basis points to 4.74%. However, we think bonds have now entered attractive levels. The RBA held rates steady at 3.6%, but turned more hawkish. Governor Bullock flagged rate cuts are off the table and set conditions for potential hikes. While other central banks and the RBA tilted hawkishly, the US Federal Reserve cut rates 25 basis points to 3.5 to 3.75%, given soft labour market data and well-behaved inflation. That interest rate differential, along with improved risk appetite and commodity support, saw the Aussie dollar rise another 1.9% against the US dollar to 66.73 cents. Headline equity valuations remain above long-term averages, but earnings growth forecasts are pretty robust over the next 12 months. And there's an expectation of a broadening of growth drivers as well, which, along with pockets of value, create opportunities for active managers. I'll be back in another month with the January monthly review.